A teďka už prosím Malcolma Haydaye, aby se chopil vysvětlování, co dělá etického bankéře etickým bankéřem.
Jenom minutu, než se vystřídají ty přednášky, tak vás poprosím, jestli byste vstali a udělali hluboké a... Děkuji.
And then I just go, okay, okay, fine, thanks. Okay, all right. Good morning, everybody. I'm conscious that I'm the only thing that's stopping you going to lunch, so I regard that as a very real responsibility. My background can really be split into three parts, I suppose. Interestingly, each of about 20 years. For 20 years, I was in education, full-time education, and finished my education, my formal education, with a degree in economics. I then joined the mainstream banking sector for the next 20 years, although never in a retail bank, in some of the more unusual banks, the international banks that predated investment banks. And then for the past 20 years, I've been working in social banking. The first 10 of those was actually spent trying to create a social bank in the United Kingdom and arguing with the regulators as to why they should actually allow a new social bank to be created. Interestingly, I met some of those regulators a few weeks ago who told me that if we fast forwarded 10 years, they would not allow us to be created today. So that is something of the challenge that you face if you want to go down the banking route. And I left the bank, which I was chief executive, the charity bank, in October last year, partly because I was concerned that my health was something that wasn't going to survive another 10 years of regulatory hassle, and also because I was increasingly concerned that my job and the job of several of my colleagues was being spent on talking to regulators and not talking to customers. And a bank cannot operate without loyal customers. And I just felt that the regulation was getting too much in the way of what we were trying to do. So I then moved to the Institute for Social Banking, which is a membership organization of social banks in Europe. And part of my job now is to help develop programs that helps us find the next generation of social bankers. Because when I left Charity Bank, I gave my board 12 months' notice of my intention to go. And it actually took them 18 months to find my successor. There are local investment companies in Britain today who cannot find new managers because it's just so difficult to find the people with the right motivations and the right skills, and I'll come on to that a bit in a minute. Because you can't just walk out of a commercial bank into one of these organizations without going through either a complete brain change or some other mechanisms. And I think it's actually, I mean, I'm very grateful to all of you to have come today, but I think it is rather sad that neither the central bank nor the Ministry of Finance could actually find anybody to send. Because I think they're missing part of the conversation that inevitably at some point in the future they are going to have with you. And I think that's extremely important. So what do we mean by social banking? Now, the sad thing is that KPMG and Accenture and other people have hijacked the name, and they refer to social banking as social banking 2.0, which is all to do with social media. And Citibank even now has a social banking account, which is actually their telephone banking renamed. We're not talking about that, although we recognise that the social part in that is connecting people with money with people who need money. But we're not talking about that. We're talking about something, I think, which is far more fundamental. The Institute for Social Banking refers to it as the provision of banking and financial services that pursue as their main objective a positive contribution to the potential of all human beings to develop not just today but also in the future. So what we're doing is we're focusing on the needs of the real economy. We're not talking about making money out of money of itself. And we're talking about taking into account not just the financial or economic outcomes of our decisions, but also the ecological and social impact of those decisions as well. So I think if you think of social banking as a process, not just as a steady state, as you think of it as a verb rather than a noun, then I think you tend to get where we're sort of going to. Social banking is not something magical that has never been heard of before. In reality, it bears a very strong relationship to classical banking, but it's about relationships and a vision of a sustainable society. And somehow along the way, the classical banks lost sight of that and focused for all sorts of reasons on short-term gain. As I mentioned just now, it's about something that is linked totally to the real economy. We are not talking about speculation. We're not talking about arbitrage. We're not talking about hedging. We're not talking about, if you like, derived financial products. And it's about maximising sustainability and the impact upon society, not maximising profit. There is an international network of social finance organisations called INAISE, I-N-A-I-S-E. And recently the banking group members of INAISE came together and felt that it would be fair to say that what they're seeking to achieve is profit at a fair and stable level. And the average target return on equity they put at 7%. Now, you may think that's high, but that does include inflation. So you're talking probably of something like a more normal return of about 4%. I think this comes back to a point that somebody was making earlier on, that in that context you can look at banking as a utility. This is a return for the provision of public good services. This is not about speculation. This is not about investment banking. This is not about double-digit return. But let's be clear that whether it's through the JAK model or others, any organisation, and particularly a bank, has to make money. Otherwise, it's not going to be in business. And we can all have the best ideals and the best visions in the world, but if we don't make enough money to stay in business, then it's no good to anybody else at all. The other very important aspect of social banking is transparency. And I brought with me a few copies, which I think are outside, of the Charity Bank Annual Review. And like all other social banks, Charity Bank produces pages of information about exactly where it lends its money. And we believe this is extremely important, that customers have the opportunity of knowing exactly where their money is going. And one of the things that Charity Bank has developed in the UK is once a year, to coincide with National Ethical Investment Week, we run a series of tours for our depositors and our investors where we take them out to the borrowers to meet them so that people can see exactly where their money is working. And this connection between the source of money and the application of money is extremely important and helps us, not surprisingly, get more money. So think of social banking, if you like, as banking with a human face. Again, we've touched on this earlier, so I won't spend too long, but really there's a history that probably even predates the 16th century, but for, I guess, the sake of starting somewhere, we start in the 16th century with the Monti di Pieta that were established in Italy, which were really about taking wealth and using it for community good. In the 18th and 19th century, as has already been mentioned, the credit unions, the cooperatives, the Raiffeisen, and now in the 20th, or as was the 20th century, the ethical banks, and now beginning to develop in the 21st century, if you like, responses to the general dissatisfaction with banks and actually how you can develop local investment companies and other financial instruments that do not necessarily need to be banks in themselves. In addition, and I haven't really covered these in my short intervention, are things like religious banks, microfinance organizations, and other types of credit operation, which do play an important part in this jigsaw. We can find social banks in a number of countries in Europe. Denmark, France, Germany, Ireland, Italy, Luxembourg, Malta, the Netherlands, Norway, Spain, Sweden, Switzerland, and the United Kingdom. And forgive me if I've left anybody else out. We know that there are individuals, groups working in Bulgaria, Finland, Hungary, Iceland, Portugal, and also yourselves, who are all exploring, and at different points on the journey, as to how one might create a social bank or some other type of intervention. And one of the things that we haven't really talked about yet is what are the impulses that affect that intervention? A number of these banks have come from people with shared values. A number of the banks have come out of the anthroposophical movement, the Waldorf, the Steiner schools, etc. A number, like Charity Bank, have come from civil society organizations. The Alternative Bank in Switzerland really came out of a people's movement around apartheid and also the need to do something about the environment. And all of them have in common activists. The challenge for all of them is to harness a number of competing, sometimes, views and objectives. In resourcing any bank, you need capital and you need deposits. Some of those deposits are very happy and willing to come to you, but are not happy to take risk, and therefore would be looking for a different type of structure to, say, the local investment company, because they may want access to that money fairly quickly, and they may also want that money back in the full amount that they put in. They can't take risks with that money. One of the things that Charity Bank has is it has deposits from a number of NGOs who have what they call rainy day money. That's the money they will need if they ever have to close to pay all the bills before they finally close. And what they decided was they would put the money on deposit with Charity Bank because it's fully protected by the government insurance program, but in return they would not take any interest. There are other people who say, I'm actually prepared to risk 10%, 25% of my money, and that may not necessarily be best placed within a bank. Because although we do take risk, and we take risks that the banks do not, or the commercial banks do not take, we cannot afford as a bank to put at total risk our savers' money. Now, one of the questions in the last session was about the default rates amongst social banks. For a whole variety of reasons, and we haven't got all day to debate this, It is important to understand that social banks have a remarkably good repayment record with their borrowers. Over the 12 years that it has existed, the total loan loss rate for Charity Bank is 0.3% of its total loan book. Now, as I say, there are lots and lots of reasons for this. And part of the problem of the lack of understanding of regulators and commercial banks who see no profit in this type of business is they don't understand that inherently many of these organisations are actually less risk than major multinational or corporate businesses because of the values that drive these organisations forward and because of the fact that many of them work with people who have been excluded by society anyway. And the last thing they can afford to do is to take risks that will put the lives of those people at risk themselves. The social banks invest a lot of time and effort in telling people they should not borrow money when it is actually not appropriate for them to do so. We're not there to get paid by the number of deals that go out the door. We're not there for a whole series of reasons that are to do with profit maximisation. We're there to maximise the impact of our intervention within that community or that society. So what makes a banker social? I would suggest to you that it's not those characters, although you may wish to attribute your own bank name to some of those characters. But it is people with some or all of these characteristics. Above all, I think, is a commitment to a vision and to be undaunted in holding that commitment to the vision, whatever happens. As I said, it took us 10 years to convince the financial regulator, the charity commissioner, the tax authorities, the government, that actually the United Kingdom needed a new social bank. If regulators feel that they do not, it takes a long time to persuade them otherwise. So you've got to be tenacious. You've also got to be aware of environmental and social issues in your business practices. You cannot tell people to do one thing and then you go and do something completely different. So one of the things, for example, that Charity Bank does, it has a deliberate diversity policy and inequality policy in its employment practices, but my salary could never be more than 9 times the salary of the lowest person in the organisation. We never paid individual bonuses. The one year that the trustees, the board, decided they would pay a bonus, we persuaded them that what they should do is they should pay £300 to every single member of staff, irrespective of their salary or position in the organisation. Because when you're working with an organisation that has 40 members of staff, I can't tell you whether it's actually the first telephone call, the wording of the email, or actually the discussion during the loan decision-making process that determined that we got that piece of business. It's everybody working together as a team. The other thing that Charity Bank does, and I know a number of other social banks do this as well, is we don't believe that you can know about, in our case, the NGO sector if you don't involve yourself with it. So we give everybody, every member of staff, 7 days a year to go and volunteer in the NGO sector. And in addition, we give the whole staff 1 day to work as a team on a project that they particularly want to. It's also important that you judge what is ethical, both, as I've just mentioned, within your own processes and outside the bank in the types of products that you develop and offer. And you then apply fair practices throughout. I had an interesting discussion with a French social bank last week about how you can develop an ethical way of getting rid of staff. And this is around actually being a kind employer that recognises at times you have to lose staff, but there are ways and means of doing it. And not sending them an email on Christmas Day is one particular way of dealing with that. The very important thing as well that social banks are doing, which distinguishes us from mainstream banks, is we are investing a lot of time, effort and money in understanding the impact we are making. And that is different from some of the other impact measures you come across. Because for any intermediary, it's very difficult to understand whether it was our money that made, or our depositors' money that made the difference, or was it actually the fact that that empowered the management team to go and do something differently, or was it, in the case of one of our borrowers, that because they got a loan from us, the local authority suddenly thought this was an organisation they ought to be working with more because they had more respect for them. At a time when in many communities in Britain, money is leaving those communities, the signal by a social bank to reinvest in that community can be very important in attracting other investors. And, as I guess you would have probably understood by now, I think the strongest characteristic of a social banker is never giving up. It's extremely important. Against that background, the Institute has a mission to develop the social banking sector through education, research, and the encouragement of public debate. We want to build awareness and understanding, not only of social banking itself, but because it is, if you like, coming of age. GLS Bank, who you will hear of later today, is celebrating next year its 40th anniversary. So we are now able to offer career paths to people in social banking in a way that even 20 years ago we weren't really able to do. But to do that, we need to attract new people to come into the sector. We want universities to work with us, and one of the things that at its summer school earlier this year in July, the Institute agreed on is that we will shortly be launching an academic network of people interested in social banking, where we can actually work with universities on joint research, but also to be a critical friend to the social banks. One of the challenges that microfinance went through was that there were lots of glowing reports about how microfinance was getting rid of poverty. The UK government commissioned an independent research and found that most of the positive evaluations about microfinance were written by microfinance institutions who had, not surprisingly, an interest in saying how good it was. So we're very keen that social banking learns from that and opens itself up to independent scrutiny. We know we're good. We want other people to independently say, actually, they're pretty good. And that we are responding to particular needs in society. Those needs will sometimes arise because people want to see their money being managed differently and much more in line with their values. In other cases, it will come because people recognize that certain parts of society are not getting access to finance in the way that they really want to. I did not start Charity Bank because I wanted to start a bank. I started Charity Bank because I saw that using financial instruments was a particularly positive way of tackling marginalisation and exclusion in the United Kingdom. So I used it as a tool, if you like, for social justice, rather than just setting up a bank for the sake of it. But we certainly have this vision of a more just society where the pillars of, if you like, ecology, society and economics come together and are treated equally rather than one particularly dominating the others. how might we help you going forward? We are, as an institute, working on developing a social banking toolbox, which will be a combination of notes, literature, and probably convening a number of forums of people who are interested in this topic to share experience and problems and issues. We are looking at starting a new level of membership within the Institute to take that further forward. Next summer in Lyon with l'ANEF, who are themselves seeking to move from being just a cooperative to become a full bank in France. They with us are hosting the summer school in July, and details of that will shortly be on the website. And that is often a meeting ground from people around the world who want to start social banks. And that can have a very particular benefit. And we also run a certificate course, which is of sort of degree level. Currently, it's in a strange English-German, in the sense that it's provided by Alanus University, but it's provided in English. And we recognise that that is not necessarily helpful to a lot of people. So we are looking at ways and means that we can work with other universities to offer these certificate programs in own languages. And again, if there is anybody in the audience here who would be interested in discussing that further, we'd be very happy to talk to you and do so. More information about me and the Institute is there. If you want to know about Charity Bank, it's www.charitybank.org. One final note I should add about Charity Bank, which I'm not particularly happy about, but I recognise it is inevitable. When we started the bank, we were very clear that we wanted it to be a bank, but we also wanted it to be a charity. And that's probably why it took us 10 years to get approved. But we got there. Then along came Basel III and the Capital Requirements Directive 4 from Brussels, both of which effectively meant that we can no longer be a charity and a bank, because the restrictions on distribution of monies under charity law are very different to the supposed restrictions, i.e. there are none, under banking law. So the bank is having to restructure itself to have a charity sitting alongside the bank rather than actually all being in the same thing. I think that is an unfortunate development, but it is one that I've had to accept was necessary for the future development of the bank. Thank you.
Takže děkujeme Malcolmovi Haydayovi z Social Banking Institute a máme zase prostor na pár dotazů, připomínek z publika. Jsou-li nějaké? Kolega vepředu.
Dobrý den. Já bych se chtěl zeptat na ten impact measurement, jak vlastně na základě čeho, co jsou ty vlastně proměny, které měříte, nebo jak hodnotíte prostě ten impact, který jste udělali na tu společnost?
There is no set rule yet, because this is something we're still learning as we go along. But what we're trying to understand is, if we introduce the money to an organisation, what does it expect to happen, say, over the next 5 or 10 years, the life of the loan? So we can use that as, if you like, the standard line. And we can then monitor the variation around that, because inevitably there will be variation. But what you're looking at is, what is the impact upon the organisation itself, upon its way of doing things, and whether it actually improves the way it does things. Because what we're not interested in doing is just building bigger organisations with money. We're looking to build more effective organisations. So we need to understand what is happening internally within the organisation, And we also need to understand what happens to the relationship it has with its customers or its beneficiaries, its stakeholders. So how does its position improve within the community? What happens to the service that is provided to those customers? So we go and interview the customers as well to understand. We also look at whether the financials of the organisation are becoming stronger, because in many cases, one of the things we're doing is we're helping them move from grant dependency to financial independence. So is that actually happening, or are they spending the money on more people who aren't necessarily needed? And it also provides a topic of conversation each year with the borrower as to how the impact measurement is going. Because what we want them to do is we want them to do the analysis themselves rather than us always have to do it. Because we want it to be a tool to help them. One of the problems that is now happening in the United Kingdom is that NGOs are finding themselves in a competitive market. Not just with government, but with donors, with people who give money. And they need to be able to explain themselves much better to those stakeholders by demonstrating the impact they have. They can no longer just show you a picture of a crying baby and say, look, help. They need to show you how that baby stops crying, how it grows up over the next few years in a healthier environment than would otherwise be the case. There is a lot of disagreement about how we should capture this information, because what we don't want to do is burden organisations that have to capture much more data than they already do. So how can we take what they're already producing and help them think about what they still need to produce to actually get to those types of answers? Also, I think that the type of information a bank needs is different perhaps to the type of information a long-term investor needs or a government needs. So we're all agreeing to disagree, if you like, on how you measure social impact. And it's not just social impact, it's economic impact, it's environmental impact. Because, I mean, I've just spent a month in Scotland, and in the islands of Scotland there is a very severe issue, which is around the young people leaving the islands. So they have started to develop salmon farms in the open sea, in the lochs in Scotland. There are environmental and other issues around salmon farming. But there is also a recognition that it is the only opportunity currently in the Scottish Islands for people under 25 to get work. So how do you balance the economic necessity with also the environmental desires? And these are some of the clashes that NGOs face around employment, environmental issues, etc., etc. We're a long way from finding good answers yet, but all we're doing is we're recognising there is an issue, there is a problem, we have to somehow measure it. The other important part in all of this as well is that we as the lender learn from this practice. So, for example, if we're lending to community enterprises that work with people with dementia, and one particular business model seems to be much more effective than the others, why is this? And should we be trying to find more of those types of organisations to help, because that could be much more effective than perhaps some other models that have very different outcomes? So we're not trying to only support what we determine to be effective, but we're trying to work out where we have the most impact with our money.
Díky. Než bude případně další dotaz, tak bych poprosil Malcolma, jestli bychom se mohli z té obecné úrovně, na které se pořád pohybujeme, dostat trošku na konkrétní příklady. Se může říct nějaké zajímavé projekty, možná jeden příběh krátce, který podpořil, abychom si dokázali představit, co obnáší etická banka na té straně příjemců úvěrů nebo řekněme, pomoci s financováním.
This is an organisation I've just taken in random from the charity bank portfolio. It's called Foresight in East Lincolnshire. They're an organisation, an NGO, that works with people with severe disabilities. And I have to say, if you met these guys on a dark night, you wouldn't necessarily want to stay around too long, because they're a real rough and ready group of people, but their heart is absolutely in the right place. They came to the bank initially because they had an opportunity to buy from the council a rundown building in the central part of town, and they could turn this into a facility for disabled people. We spent several weeks talking to them, getting to know them, talking to the people they contracted with to make sure how they were regarded within the local community. So we had a real sense that this was providing a service that was needed and wasn't actually being provided by anybody else. And we helped them buy the building, and it was a great success. Not long later, which got us slightly concerned that were they growing too fast, they came to us because the opportunity came up to buy the kebab shop next door. Now, I would add that they did not wish to run this as a kebab shop, but what they did identify is that many of the people who were disabled actually wanted to be able to go to the gym and felt very awkward in going to a gym club and revealing to everybody their disabilities. And so there was a real sort of social issue here. But they could see that with the help of volunteer labour, they could convert the kebab shop into a gym for disabled people. And that's exactly what they've done. And that has brought more people into their network. And the local council pays for people to attend this gym. So that's how they get their income. They're now going one stage further, and there has been a care home in Lincolnshire for many years. That home is now been empty for a few years, and they've come up with the idea not of reopening it as a home, but actually turning it into self-living apartments where people with disabilities can actually, if you like, move back into society by living in their own space on probably a shared ownership basis, so that ultimately they will end up owning this particular property. And I think this shows a group that started with really not a lot, but by working closely with them and encouraging them to grow step by step without growing too fast, they have been able to increase substantially their support for particular disability groups in a part of Britain that is not exactly the most economically active anyway. So in addition to what they're doing for the people, they're actually increasing economic activity in this particular region as well, and have employed more people, very often themselves with disabilities, in their own organisation. So in many ways it's a win-win, and our depositors love that type of story. They love to see their money working, and the great thing is that we will get somebody from that organisation to come and talk to our borrowers in the annual meeting. That person has never stood up in front of 250 people in their lives to tell their tale, but somehow feels empowered to do so. So what you actually give back to those private individuals on that individual basis, as well as the wider community level, is truly amazing. And I'm not saying that commercial banks don't do it, because inevitably in providing loans, sometimes they do. The trouble is they never take the time or effort to understand that is the true potential impact of the money they're actually putting to work.
Díky, myslím, to bylo zajímavý příklad, který dokreslil fungování etické banky, čili z banky. Prosím, tady je další dotaz a vzadu pak další ještě.
Takže já bych se chtěl jenom zeptat, jak ten boom těch etických bank je velký, nebo můžeme mluvit o boomu etických bank, protože přece jenom tam jsou ty úroky za ty vklady nižší a tak dále a řekněme si to otevřeně, většina společnosti je na ty peníze a tak chceme vysoké úroky a co nejvíce rozmnožit ty peníze, že jo? Přistupujeme k tomu jako to zboží. A vlastně ten základ začíná u každého jednotlivce, ta změna myšlení, takže jak vlastně je zájem o ty etické banky a jak vlastně změnit myšlení je těžké, protože to musí každý jednotlivec sám. Takže jak na to nějak tak, jestli ví, poradit můžete nebo říci.
Okay. Let's just set ethical banks aside just for a minute. Certainly in the United Kingdom, but also in other parts of Europe, I think as well, which have been particularly affected by the financial crisis. It has caused many people to question the role of banks in our society and what, if you like, are individual citizens getting in return for the billions of pounds that have been put into bailout, particularly when that has meant that some schools have had to close, some welfare schemes have had to close or been reduced because priorities have had to be reordered. And as a result, certainly in the UK, people started to look around for alternatives. There are very few alternatives in the United Kingdom because the banking system is dominated by 4 or 5 big banks. The government tried to engage with the banks to become more socially responsible, and the banks paid lip service to this but did not deliver. And as a result, the UK government has lost patience with the banks and has introduced legislation to make it easier now to start up new, what they call challenger banks. So interestingly, taking Oscar's example of the bakery or the community shop, Tesco's have now started a bank in Britain. And other organisations at that level are starting banks. But also at the smaller level, there are new banks that are being opened up. The problem is that the cost of entry is still very expensive. I mean, it is calculated that you need approximately 50 million pounds to start a new bank in Britain today. We were lucky, we had to have 5 million euros, so 10 years makes a big difference. What has also happened is that most savers are getting nothing or maybe 1% on their regular short-term savings. So it's not as though they're having to forego a significant interest loss by switching their banking. And more people are attracted to the transparency, the honesty, the openness that social banks offer. Social banks in Britain, and if you take effectively Triodos Bank, Charity Bank, Ecology Building Society as the 3 main examples, are growing at something like 20 to 25% per annum. There is an argument that that is not sustainable, and it can't be sustained because you can't keep growing capital fast enough to be able to go on accepting more and more deposits. But there is definitely a sea change happening in Britain, and I suggest in other countries as well, about their attitude to banks. We're not really offering that much lower return than commercial banks today. We might well do in the future when interest rates start to rise again. But people are also getting that there is a social return as well as a financial return. And if people feel they can actually go to bed at night happier about what their money is doing while they sleep, then that makes them feel good. Whereas a number of them are beginning to say, actually, I feel very uncomfortable that I didn't know what was going on that led to the crisis. And even some of the big trusts and foundations, the charitable trusts and foundations, recognise that they were partly complicit in the financial crisis because they did not challenge the investment advisors about where our money is working, what is it doing. And that's been, I think, a big change that's happening. We recognise that it is unlikely that we will ever get everybody to open an account with a social bank. We don't need everybody to open an account with a social bank, but what we want people to do is to think consciously about their money. A friend of mine said in public the other day that in his view we have the financial system we deserve. And his argument was that because we have not challenged the financial system to date, we're getting the results of that. We have to become more demanding. There's something about money that people use it in a conscious way when they buy goods, whether it's fair trade, organic, local. But when it's sitting doing nothing because it's in the bank, they don't apply the same rules. I think that attitude is changing, and there are a growing number of people who say, yes, I have values that I express in the way I buy things. Those values should also be reflected when my money is sitting in the bank. And therefore they want to see banks share those same values. So I'm positive that the social banking sector is growing. I hope it is not a boom, because inevitably what follows a boom is a bust. And we're not in the business of banking busts in the sector because it's too important, it's too connected with the real economy. So it has to grow sustainably rather than just mushroom. And what's happening right now with Ecology Building Society and Charity Bank, we have, one of the other hats I wear is I'm a director of a movement in the United Kingdom called Move Your Money, which is about getting people to think about moving their money out of the mainstream banks. And next week, the government is going to make it easier for people to move their money. You can now move it, believe it or not, in 7 days rather than the 30 or 90 days it used to take. And one of the things that will do is it will make more and more people want to open accounts with people like Charity Bank and Ecology Building Society, who right now are actually full up because of their need to raise more capital to underpin those savings. So that we're having to introduce waiting lists. But interestingly, people are very happy to go on the waiting list and say, as soon as there's room, let me know and I'll move my money.
Děkuji za vyčerpávající odpověď. A jenom na konto srovnání etických a konvenčních bank upozorním na studii Globální aliance pro bankovnictví založené na hodnotách, kterou máte v těch foldrech, taková modrá studie, která porovnává výkon právě konvenčních a etických bank v době krize. A etické banky samozřejmě z toho vychází velmi dobře, proto vám to tam prezentujeme. A poslední dotaz, prosím, nahoře.
Haló. Děkuji. Artur Linhardt. Já bych měl otázku k té transparentnosti, o které jste mluvil. Myslím si, že to u nás taky bude velké téma, protože malé banky a kampeličky v minulosti s důvěrou. A tak bych se právě chtěl zeptat, na jaké úrovni transparentnosti vlastně třeba ta vaše banka se pohybuje, jestli je to nejenom transparentnost, teda jaké peníze sama spotřebovává pro svůj běh, ale i třeba jakcí jsou tam vkladatelé, jakcí jsou příjemci těch peněz, v případě i třeba jako kolik komu jako zrovna půjčujete, nebo kolik zrovna kdo vložil a jakým způsobem je to kompatibilní s nějakým bankovním tajemstvím a ochranou osobních údajů a podobně.
Thank you. We like to be transparent throughout the whole activities of the bank. So while the primary tool is the annual report that publishes the list of all of our borrowers, that is updated regularly on the website to make sure that it is current. Through the annual report, you can also see exactly how people are paid and who gets what, and that therefore we're not paying extortionate wages, we're not paying exorbitant salaries, or we're not giving bonuses, as I mentioned earlier. We also welcome people to come to the bank and see how we work. Being in a bank office is pretty boring for those of you who, and it's actually only when you get out there with the customers that you really begin to appreciate, how the bank genuinely works. The only thing we do not publish, and also I would add that we get around the data rules because with all of our borrowers, we require their permission to publish the data. And if they don't want us to publish the data, then we have a discussion as to why. Now, just for example, one of the things the bank has done over the years, it has lent to organisations who run refuges for women who are abused or in other problems with society. And it is extremely important that the whereabouts of those refugees are not divulged, because other partners, ex-husbands or whatever, might come and knock at the front door, and that's not the idea. So we agree with the borrower that we will be very vague about actually where this is located and just refer to the fact that we have funded a property. So it's that type of respect. What we don't say openly in the website, but we do provide it in other data, is what we do with our liquidity. And when the financial crisis first happened, this was a problem for all the social banks because we were required by the regulators to place our liquidity with what the regulators regarded as the best rated institutions, which for some reason they decided were the largest banks in the world and our government. A bit like Oscar talking about placing money with the state. Now, we have no choice in that. We don't lend to other social banks because no social banks require money from the money market. All of the social banks fund themselves from their depositors, not from other banking institutions. So we don't need to do that amongst ourselves. But we had one or two other ways and means of supporting our borrowers through our liquidity. Because the regulators are so paranoid about another run on the banks, we're not allowed to do that. So we have to place money, much as we don't like it, with people like Barclays Bank, with HM Government, with HSBC. All I would say is that this is quite a small part of our balance sheet. It's also for very short periods of time. And the way we do it, because again, if you think Charity Bank is a very small bank, it only has £100 million balance sheet. So it might be wanting to deposit £5 million with Barclays Bank for a month. That's too small for Barclays Bank to consider. But frankly, we don't have a choice, and they don't have much of a choice either. But the way we do it is we do it through a fund that is actually run by a mutual. And the fund pools lots of these small amounts of money together and then places those on deposit with the big bank. We have total control over which banks they go to, but at the end of the day, those banks are not really controlled by us. They're the ones that the regulator tells us you have to place your money with those banks. That's the only area I feel uncomfortable about. But we have explained it to our depositors, and they understand why we do it. Because they never lent money to us to lend it to Barclays Bank. That was never in their sort of thinking. But for your liquidity, that's what you have to do. Otherwise, I think we are transparent. We have an annual meeting where approximately 10% of the bank's depositors come every year, and we're now running that in various locations around the United Kingdom. That enables both borrowers and depositors to meet each other, but also enables people to meet the board, the members of staff. Everybody knows members of staff by their first name. It's not a dear Mr. and it's certainly not, as far as customers are concerned, dear account number 5467. We just don't operate that way. We're always open to suggestions on improving transparency. But again, coming back to your key point, this is all allowed because we seek permission from everybody to do that. The commercial banks will hide behind data protection by saying we can't tell you that we lend to British shipbuilders or British Aerospace or whoever. That's rubbish. They can if the borrower also agrees. And I guess that's kind of interesting in a town here where I think historically armaments have been a very important employer of people in this town. So.
Halo, už to funguje. Děkujeme. Čeká na nás oběd, takže já myslím, že Malcolm zaslouží ještě jedno poděkování, prosím, potlesk. A velmi rád vás zvu na občerstvení, na takový lehký oběd, který je nachystaný zase v té vedlejší aule. A ve 2 hodiny bych vás tu rád viděl zpět. Budeme pokračovat příspěvkem Hanse Floriana, který bude mluvit o GLS bance. Takže díky zatím a ve 2 hodiny zde zpět.